Investing in the stock market is easy, actually. Yeah, I know. Everyone says it's complicated, risky, and something only Wall Street pros can do. But the truth? Anyone can invest and grow their wealth, and today I'm going to show you just how simple it really is. Stick around because by the end of this video, you'll have a step-by-step strategy to start investing with confidence, even if you've never bought a single stock before. Let's go. Alright, let's address the elephant in the room. Investing sounds intimidating because there's a whole industry built on making it seem that way. Financial jargon, complex graphs, suits yelling at screens, it's all designed to keep you thinking you need expert help, but in reality, investing has never been more accessible. Today, you don't need a broker, a finance degree, or hours of research. All you need is a phone, an internet connection, and a few dollars. Seriously. Okay, let's break this down into 3 easy steps. Pick a platform, pick your investments, and automate the process. That's it. Step 1. Pick a platform. First, you need a brokerage account. Think of this like your gateway to the stock market. There are tons of beginner-friendly options like Fidelity, Charles Schwab, Robinhood, or Vanguard. Just sign up, link your bank account, and boom, you're ready to invest. Step 2. Pick your investments. Now here's the fun part, choosing what to invest in. And no, you don't have to be a stock picking genius. The easiest way? Index funds and ETFs. An index fund is basically a basket of stocks that follows the market. Instead of trying to pick winners, you just buy the whole market. The S&P 500, for example, has averaged about 10% annual returns over the last century. That means if you invest consistently, your money will likely grow over time. Step 3. Automate it. The secret sauce to effortless investing? Automation. Set up automatic transfers so you invest a little bit each month without thinking about it. This is called dollar cost averaging, and it helps smooth out the market's ups and downs. Alright, time for some myth busting. Myth number 1, you need a lot of money to start investing. Nope, thanks to fractional shares, you can start with as little as $1. No excuses. Myth number 2, investing is too risky. Sure, individual stocks can be risky, but if you invest in a diverse ETF, you're spreading that risk across hundreds of companies, and historically the market goes up over time. Myth number 3, I'll just wait for the perfect time to invest. Bad idea. The best time to start investing was yesterday. The second best time, right now. Time in the market beats timing the market. Alright, let's recap. Investing is easy. Pick a platform, choose an index fund, automate your contributions, and let time do the rest. If you start today, your future self will thank you. If this video helped you, make sure to like and subscribe for more simple finance tips, and if you have questions, drop them in the comments. I read every single one. See you next time.